Hey, Bulls and Bears, you're watching Bull Boom Bear Bust. It is Thursday, February 23rd, 2023, back with another dose of economic reality. We've got a lot of news, as usual, to get caught up on here today. Let's go ahead and get right into it, though, and first give you kind of a briefing of where we're at. We are at a point in the economy where even the average person is starting to know that something is wrong, something is not right. The debt that people are accumulating is not being paid off. Most people living paycheck to paycheck and getting further and further into debt each month. If you're one of the people that are not getting further in debt each month, if you're adding to your savings each month instead of the other direction, instead of getting further into debt, then you are a minority or a small fraction of the population. You're in about the 20 to 30% range of the population. So things are not going good for most people. Some people will feel this, feel the pinch, financially and economically right now. People agree, that things are not headed in a good direction. But some of the other people are doing good, and hopefully we'll be, most of us here, anyways, in the group that's the 20 or 30% that's not going to be wiped out by this slow motion economic collapse that we're in. But more hints and clues are coming out pretty much every day of the direction that the system is headed in, the economy is headed in. And I don't know about you guys, but I've just got this feeling that we're on the precipice of something big. And I don't say something like this very often. Some people put timelines out there saying, okay, this is going to happen next month. I've always said that this thing can be really manipulated for a long time. But as far as something big and scary jumping out of the woods, we've got the talk of war. Let's just talk about that briefly because I'm not a geopolitical analyst or any of that stuff here. But let me just give you some of the headlines here, and I'm sure you've read them. All right, but here's just one example of the headlines here. Wall Street Journal, U.S. to expand troop presence in Taiwan for training against China threat. All right, keep that in mind and look at this. U.S. News, the Pentagon's vague threat to China over arming Russia. And in my opinion, it's no coincidence that these threats and these war escalations are happening, us arming other countries, etc. It's happening at the same time that much of the world is de-dollarizing, right? Much of the world is de-dollarizing. We've got the BRICS nations out there. So global tensions are very high right now. And, if bombs start dropping, if nukes start flying, none of these things that we're talking about here in this channel are relevant because everybody's going to have to just go into survival mode, right? It doesn't matter what your checking account is if you're just devastated and everything's a toxic wasteland, pretty much. All right, but just to put people at ease and to let you know what's going on through my mind, I don't think that's going to happen. Yes, I'm concerned about it. I do have some uneasy feelings about what's happening globally right now with the wars, with the debt, with the economy, with the different powers that be out there that want to take things in different directions. Yes, I do have concerns, but I do not believe that nukes will fly at the end of the day. Just my opinion. And, I'm not telling you not to go prepare for that. There's people out there that are preparing with duct tape and different things they can take to protect against radiation. Um, and I do have some of those preparations in place, potassium iodide, things like that, source of food, source of water. All right, well, let's bring it back in a little bit here. Let's talk about what's happening here financially, economically here in the U.S. in the slow motion economic collapse. More signs, as I said earlier, more signs coming out every day that this economy is headed into a very, very dark place for most people. And even if you're doing good right now, when most of the population is broke and destitute, how good is your business going to be? How secure is your job going to be? Most jobs right now in the US are based on people spending money. So when most people don't have extra money to spend, when the credit card companies finally say no more, we can't extend any more lines of credit, or we can't, increase your credit card limit anymore. When that finally gets here for most people, what's going to happen to your job? What's going to happen to your income? And you may think it's stable now, and I hope it will be stable for a long time. But there's bigger risks here, even if you're one of the people in the 20 or 30% right now. All right, so let's talk about a number, and more specifically, an age. When you think of the age of 65, what do you think of? What I think of is somebody that's financially secure, somebody that has their home paid off. And I think back to my grandparents. when I was a kid. They were always pretty leisure and casual. They both were not working, even in their 60s, from what I remember. My grandpa was actually a farmer, so he did some farming, but he wasn't actually having to work for what some people call the man, or for a boss. Home paid off. My parents told me about paying off our house when I was a kid, paying off our house in like 20, 22 years, I believe, by paying extra payments every month towards the mortgage. And that's not true so much nowadays. Take a look at the number of people age 65 or older that have their mortgage paid off. And this is pretty scary, in my opinion. All right. And we'll go back a few decades on this one. The number of 65-year-old plus people who outright own their home, AKA no more mortgage. And we go back to 1988, going into the 90s, this was up to about 66%. But look at the direction we're headed. Does this look like people are better off nowadays? We're down to almost 52%. So right around 53% for the number of people age 65 plus that own their home outright. So just think about now all the money creation, all the debt creation, all the stimulus programs, all the money that's created and sent out all over the world, all the assistance programs that are meant to help people. But yet things are getting worse and worse and worse. There should be more people now with their home paid off at age 65 instead of less, right? So the direction is not good. And this is part of the wealth transfer. This is part of the wealth transfer. The rich get richer, the poor, the middle class, get further and further and further into poverty. And you may be very comfortable right now. You may not think of yourself as someone in poverty. But when you look at having things paid off free and clear, most people are, not headed the right direction, as this chart lays out here for people age 65. Right. And the reason I wanted to point this out, because this talks about age 65, is because, again, age 65 is an age where you've worked your whole life and hopefully you're retired. But as we've reported earlier, we've got this trend of retirees, or people old enough to retire, unretiring and going back into the labor force because of the cost of living. And this chart goes right along with that. It tells you the sad events that are happening here. And still on the topic of housing, those that do own their homes, or even people that own their home and have a mortgage, look how much equity they've lost because of the housing price correction that we've seen so far. And we've got a lot more to go. U.S. housing market posts $2.3 trillion drop. So $2.3 trillion in overall lost equity for homeowners. And this is a report out of Bloomberg, which is citing Redfin data. After peaking at $47.7 trillion in June, the total value of U.S. homes declined by $2.3 trillion, which is about 5% in the second half of 2022. According to Redfin, that's the largest drop in percentage terms since the 2008 housing crisis. And we're just getting started. Right now, on the topic of real estate and home prices, I still see comments from time to time, and I actually get messages from time to time too saying, JJ, you said the housing market was not going to go down. You said it was going to go up forever. There was a time when I doubted that the Fed was going to raise rates and keep rates elevated. I thought they would cut rates. So I'm actually proud of what they're doing right now. I know that sounds weird. I've been pretty critical of that particular institution and those people over there known as the Fed. But I have to say, I'm glad they haven't cut rates. Now, it doesn't mean that they're not going to make some surprise announcement because of economic weakness that comes out in the next few months, or maybe this summer. We'll have to see. And maybe they will cut rates still. But as of now, they haven't cut rates. They haven't pressured mortgage rates via the bond market. They haven't pressured mortgage rates to stay ultra low. Mortgage rates actually are now between 6.5% to 7%. Once again, they've begun rising here in the last few weeks. So yes, there's going to be more weakness in the housing market if this continues. And I don't pretend to have a crystal ball or know exactly what's going to happen. I think home prices should have crashed way more now than they have. But look what's happened with mortgage rates. They were pushed back down to about 6%, even under 6% for a while. So there's no way, and I've said this a lot, there's no way for me or anyone that I know of to predict manipulation. If this economy was based on fundamentals, if you just look at the levels of debt right now, prices should have crashed a long time ago. The prices of automobiles should have came down a lot more than they are. But the ability for people to take on more and more debt, more loans. It's keeping the prices elevated. And it's not just the banking system. I'm not just pointing my finger at the banking system. It's people's willingness to take on debt. People are no longer afraid to take on debt because it's the new normal. It's been normalized that just living your whole life, and as the chart showed at the beginning of the video, living your whole life in debt. And even at the age of 65 now, it's becoming more and more common to not have your home paid off, to still be slaving away to debt into your senior and retirement years. And I know that sounds, maybe harsh to say, but that's what's happening. More people are just not making it at the end of their careers, and it's happened so slowly over many decades that it's been normalized. Most people just think that's the way it is and the way it should be. And maybe it is. Maybe life would be a lot worse if we didn't have the ability to take on loans and debt. We wouldn't have as new vehicles as we have now. We wouldn't have as new houses as we have now. Or would it be better? Maybe things would be much easier. Um, maybe prices would be much lower, so people would have more time off, more time to spend with their family, more time doing what they love to do instead of working that job that they really don't want to work. Now, speaking of car prices, I'm at a point right now where I'm almost going, we're right about there. We're almost going to give in and go out and buy either a new or newer vehicle, right? So I've been waiting and waiting for prices to come down because I just don't like buying at the peaks of bubbles, even though it's not going to break me at the end of the day if I buy something and prices drop. But the principle of buying something knowing that prices are going to come down, it's against my principles, right? But we have this car. It's got about 130,000 miles on it. It's a Honda, and nothing major's gone wrong with it. It still runs pretty good. Doesn't look that good. It's got some peeling paint, but these repairs are starting to add up. And it's not just the cost of the repairs. I was thinking about this the other day. Just taking it into the shop and then going to pick it up and finding a ride from the shop with the mechanic, keeping the vehicle for the day or sometimes 2 days, depending on what's wrong with it. The hassle plus the cost of ongoing maintenance is starting to outweigh not having a car payment, right? So when your repairs start costing more than the payment would cost for a newer car, then it's time to start thinking about getting a newer car. You know what I mean? But I've been holding off for a long time, waiting for prices to come down, and they have come down a little bit. So my wait has been worth it so far. We've seen a bit of a drop there, about 8% the last I checked from the peak used car prices. Such a small drop, though. Most people won't even notice it when you go to look at cars. They still look pretty expensive just looking at the sticker price for both new and used vehicles. All right, but it's this availability of loans. And even with delinquencies rising for people with subprime credit scores, more new loans are still being given out to that same subprime group, those same people with the ultra low credit scores. So that's why we're still seeing prices elevated, right? And it should be very difficult for people to borrow money when money is actually real money, when it's backed by something. Then it's difficult to get money. It's not easy to get loans because banks have some skin in the game. They have something on the line. Now, with this digital money, click of a mouse, they create trillions of dollars. There's no risk. So, therefore, the banks are more willing to loan out money, and therefore, asset prices remain high or don't come down as fast. So, this all goes back to the system of money. How can we win at this? At the end of the day, hard assets. Going to try to put this in simple terms. There's people out there, there's groups out there that want to see us go to an all digital currency, a currency that they will control and that they will be able to create at the click of a mouse. And they're going to be able to put rules on that currency, how you can spend it, how soon you can spend it. They'll be able to revoke it away from you if they don't like what you're doing or what you're saying. That is one thing that's possible. There's people out there. There's a group of people out there that want that to happen. There's another group of people out there that want us to go back to hard money, real asset hard money. Um, there's actually bills out there that have been shot down over the decades to go back to gold money, the gold standard, and even integrating silver and precious metals. But what we're looking at now across the globe is countries are reintegrating real assets into their trades, into their currencies, with oil and also precious metals. Central banks around the world accumulating precious metals like we've never seen before. I believe last year was a record for central bank purchases of precious metals. So that's the direction I think we're headed. It doesn't mean that something worse is not going to roll out temporarily before we get to that point. I still think we're going to see a lot more pain before we see things get much better and much more fair with a level playing field with real money. But the way to win at the end of this here, the long-term play is still, in my opinion, gold and silver, especially silver, because it's way more undervalued right now compared to gold. So if you want to win at the end of the day, I know it's hard because people want to make money now. They want to get rich overnight. They want to day trade and trade some stocks and trade cryptos or whatever and come out with millions of dollars, in a few months. People want to do that. And there's been opportunities for that to happen for people in both cryptos and day trading also, but it's not as easy as it may seem, right? But the long-term play, and I think the simpler play in this is going to be silver. So that's my what I'm still doing here, along with trading here and there to try to get ahead and keep my head above water. All right. And in this channel, you guys help me out by being here. Thank you for hitting that like button. Please subscribe if you like what we talk about, if you like the analysis, the news, the economic research that I do here, the charts, the data, the commentary, right? So thank you for your support, everybody. Big love. Keep stacking. Bye for now and peace.